Today's video is going to be a little bit different if you couldn't already tell. I'm going to take you through the step-by-step process that I do for my trading. So I'm going to get rid of all these price levels first because I had already drawn them up, and I'm going to start from scratch and show y'all, again, the step-by-step process that I take in order to open and close my trades, the whole 9 yards. So right now, SPY is trading at $395, down 0.2% today. So not really any major changes over the weekend. We didn't have a wild gap up or a wild gap down. I actually think since there's no major news that came out over the weekend, we're probably going to be pretty flat in the stock market today. Now, there could be news later on today that changes that sentiment, and I'll be watching for that news. But for right now, nothing really going on, and we can check over on this lovely website, investing.com. Check the news feed there. And the major news today is that the U.S. Supreme Court spurns challenge to Seattle's hotel worker insurance mandate. So I don't really think that is going to have any major effects on the stock market. The next thing that I'm going to look at is the bond market. So everybody is paying attention to the 10-year Treasury yield recently. And over the weekend, the 10-year Treasury yield went from 3.82 to an open this morning at 3.76. And now it's making its way back up to 3.793. So since there was no major news over the weekend, it's likely that the 10-year Treasury yield is going to trade flat. But the thing that might be able to change this is if there's any more talks of, say, war that ends up in people buying more bonds, which ends up sending Treasury yields down whenever there's more demand for bonds, that send the bond prices up, which has a negative correlation with the yields, okay? Again, my assumption, since nothing's really going on in the market, is that SPY is going to trade pretty flat for today, and I'm going to set up some price levels that I think that it'll be between. And there's two kinds of price levels that I like to use. I'll use opening price and closing prices of each individual day. So the closing price on November 17th was $394.28. So I'm going to draw a price level at that level. I don't think that SPY will go as low as $390 today unless there's any major war news possibly. So I don't think that we'll use that price level, but the next kind of price level that I like to use is candles of significance. So I'm going to look for the largest candle within this time frame. So this one looks a pretty sizable candle at $397.73 at open. So I'll type in $397.73 and a close at $396.49. And I'm going to multiply that by a half in order to get the average between these prices. And that gives me a price level of $397.11. So that's probably going to be my top price target for today. I don't think that we're going to rally more than $3. But I do want to set another price level just in case. And this candle is pretty significant at $350 on Friday from $396.62 to a price level of $395.24 at close, $395.24. We multiply that by half, and again, we get the average, and that one is $395.93. So that would be right around here at the middle of that candle again, the body of the candle, that is, $395.93. So I'm going to zoom back out, see the big scope of things. We're already pretty close to the 394.28 level, so that's not super reliable. So I want to find another candle of significance, and this one seemed pretty large for Thursday, 11/17. So we're going to take the open at 391.56, 391.56, plus a close at 393.14, and that gives us an average of 392.35. So this is going to be my bottom price level for today. Again, I don't think that will go down to 390 unless we have any crazy sort of news coming out But barring any black swan events, I think that will probably be in the range between $392.36 and $397.11. So I'm going to set some alerts with these price levels that way I make sure I know where the market is trading at, if it changes my thesis basically. So I'm going to set 2 alerts for when it crosses above the 397.11 price level or below the 392.36 price level. And now I'm going to open a trade accordingly. So since I'm assuming that SPY will be pretty flat today, I'm going to open what's known as an iron condor, where you'll basically open a call credit spread and a put credit spread in the same trade. So again, my assumption is that will be below 397 and above 392. So I'm going to sell the 397 call, assuming that it'll be below that price level. I'm going to buy the 398 call as creating a credit spread instead of just selling a $397 call, which I would need 100 shares for. And now I'm going to switch over to the put side, and I'm assuming that it'll stay above 392. So I'm going to scroll down the price levels to 392. I'm going to sell that one to open it, so I'm assuming that SPY will be above 392 today. And then I'm going to buy the 391 strike price, and in total we're going to get $30 in credit for each of these spreads that we're opening. And since we have a $1 difference between the strike prices for the puts, $1 difference between the strike prices for the calls, that means we're putting up $100 of collateral for each spread that we open. And since we're getting a credit, that means that we're risking the other part as collateral. So this means that we're risking about $70 per trade that we open. And the way that I do my trading is based on confidence. So if I'm more confident on this, I'm going to base my trade on how much money I want to make. So I would say that I'm fairly confident in this trade, and I want to make maybe $400 for this. So I'm going to total up 400 divided by 30, and that would mean that I'm opening 13 of these spread options. So if I open 13 of them at 31 cents, I'm going to get a total of $403 in credit. But this means that I'm risking $897. And again, that's part of the collateral that I'm putting up. So I do want to kind of keep things in check, make sure to monitor the price levels, see if anything major happens, if there's any major news that would cause me to change my mind. But for right now, I'm pretty certain on this trade, and I'm going to open 13 iron condors at 33 cents. No, back to 32 at the bid. Gotta love Robinhood and their bid-ask spreads. But I'm going to open 13 of these iron condors at 32 cents a pop for $416 in credit. All right, it looks like we're going to have to adjust our price. Y'all get to see the full thing that happens every single day. I always get the worst prices, but that's okay. But yeah, I just opened 13 of these for a total of $403 in credit, and I'm assuming that SPY will be between $392 and $397 by the end of today. So this is a SPY day trade. And now I want to make sure that I'm logging this trade. That way I can learn from it if there's any major mistakes that I make, or if there's if things go right. I want to know what went right, what went wrong, and make sure I have that written down. So I'm going to put today's date on the spreadsheet that I have available. You should check it out down in the description. Going to type in the ticker symbol SPY. This is an iron condor. So I'm going to type in both iron condor, and it's a neutral strategy since I'm assuming that SPY won't go up or SPY won't go down. And my expiration date is for today, 11/21, my sister's birthday. Happy birthday to you. And for my strike prices, I'm going to put my long strike prices on the left and my short strike prices on the right. So if we go back to this, I went long on the 391 strike price for the put, and I went long on the 398 strike price for the call. So I'll type in 391 and 398. And then we sold the 392 strike price and the 397 strike price. I opened total of 13 of these spreads, so this is the quantity of spreads that I'm opening. And I opened this for a credit, so I'm going to log this in the credit at entry tab instead of the debited entry. And I got a total of 31 cents for each spread that we open. Now, if by the end of today I'm ready to exit these spreads at, say, 15 cents a piece, I would type in 15 cents as my debit at exit, and I would make $208. But let's say that I'm wrong. Maybe, again, more war talks come up to where SPY starts flushing the lows and going below $392. I'm going to think about starting to exit this trade maybe at Friday's lows at $393. So I'm going to set a price level for that to start considering. This will be like a soft alert, basically, to start considering getting out at or below $393. Okay, so let's say maybe within the next hour, SPY ends up flopping to 393 price level, and I have to exit these spreads now at we'll call it 50 cents a piece. In that case, I would lose $247. So again, this is the exact process that I go through for each trade. I'm going to start out by looking for what news is coming out, what's moving the market, what's changing the sentiment in the stock market. Then I'm going to look at treasury yields, the fundamentals. The dollar is also an important metric to go by whenever you're trading. Today, the dollar went up 0.7%, so that's likely why SPY came down this morning. And then I'm going to set up some price levels based on my thinking. So my assumption today was that SPY is not going to go up, it's not going to go down. So I opened an iron condor with the price levels that I had set up at 397 and 392. But let's say that I felt bullish on the stock market for some reason today. Maybe I thought that it would go above $397. In that case, I would have probably either bought a call option or a debit spread, assuming that it would be above $397. So you have to learn what strategies work best in each individual market, and the markets are changing so quickly these days that you have to be willing to and able to adapt very quickly. So that's one of the keys to trading. Hopefully you found this video useful, and if you want to join me in trading every single morning, check out my Patreon. Thanks for making it all the way to the end of this video, and thank you to all my patrons for their support. And as always, remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.